Okay, team, here I am once again to talk to you about weekly plan. And in this case, we're going to talk about targets for this week and pivot. So I got a set of tools that some of them I created, some of them I improved, and some of them, um, I built from scratch. Anyways, let's talk about what's important. So if you take a look at this area here, um, I'm gonna bring in one of my indicators, and this one is called visual market profile. Visual market profile, like I was telling you before, and premium members will have access to this. It's nothing more than um, an indicator that it will create the session, RTH. You can put anyone you like in here. It will give you a zone, what you see here highlighted in white, where the session is, where it says New York. Let me move this to the right. You can see it right here. See it right here. It's gonna show you a double top line on a red, and if it's not a double top, it's gonna show you that is the high of the session during the RTH. So it's gonna be on the top no matter what. Bottom is the same thing. Um, it's gonna show us a green line here, which will indicate either a double bottom or a poor low or a session low. It's gonna get you to look into that until it's mitigated. So it's gonna extend out. The fair value gap is this green zone here, and this green zone here is also single prints. So it's a modification of fair value gap and a single print tool in one. Also, another portion of the tool is coloring um, spikes. Spikes are basically single prints that will form at a session close. And it will only form if we make a new high or a new low in the session. So for a new high, it will be yellow. For a new low, it would be purple. All right, so let's get right into our targets. So as you can see, we have this single print here from 72 to 68. Actually, I'll take that back because this candle got to here. So this is when it gets a little tricky between the fair gaps and single print. So if I check the previous candle here, um, let me see if it changes the zone. So here, there should be a single print here from 75 to 77. So I just want to confirm that um, in Thinkorswim, but I am 100% sure that we got a single print in there. If I bring my tool back again, it will tell me that I have um, a fair value gap or single print, which it would be basically, in this instance, it would be the same. So, but if you want to know exactly where the single print is right here, is where the high of this candle is here to the low of that red candle here. That is a single print here, the red of that candle. It's just that it would not go away until it's filled 100%. But what it's telling us is that nothing has been traded from this candle and on. So that is what makes it a fair value gap. It just happens to be that it also is a single print at the same time. So I'm gonna delete that right there. So that this green zone means that we just have a value gap and a single print combination in here that it will not go away until it's gone 100%. We open on a true gap up, which means that we open above the previous day high, and this is a gap here. So if I do this gap finder, you will see that it's stating that the gap is from here. So this is a price gap, but it's in reality, this is a true gap up, and the true gap up would get filled when the high of this candle is traded, which would be right there. So this is a true gap up. It's funny because you had that equal high here, basically not necessarily the same, but this is where the balance 3-day, it was a 4-day balance, was prior to a breakout. But this is basically what we're looking for right here. 4240 is technically speaking is the true gap up. The top of that gap is 4249. Pretty convenient, right? If you were taking the trade at 4250, you don't have to do anything. All right, so last week, like I said, I had target of 4260, which is basically right around here, this area here, which just happens to be an area that we had a session high that was mitigated on Friday prior or right after the breakout. It was right there, 4260. So for this week, 4260 would be our weekly pivot, because that was target number 2 last week. And also the reasons why it was target number 2 was because this extended red line was a session high that was never mitigated, and it was mitigated on Friday. Obviously, if we were to trade below the 68, it will fill the fair value gap in 30 minutes. If we were to trade below 74, it will fill that single print. I believe that the best possible scenario for buyers is to defend the gap, which is a gap fill 4240. NQ does not have this gap. All right, so let's talk about targets then. All right, so we're gonna drop some targets here and see where we go from there. All right, so that being said, we're gonna use this line here, like I was saying before, 60. When I use this as a weekly pivot, we're gonna obviously this is gonna change once I loaded that into the trade plan indicator. 60 and first target is gonna be obviously 4,300. So we're gonna bring 4,300 here. So 60 to 4,300, and then target number 3 is gonna be 4327, which is another session high that has never been mitigated. So I'm gonna put the high of that session right here. Doesn't look like a lot from where we are now, from 60 to 75 or 75 from here. You know what? It's just wait to close. Let me see if we have another target right above it. All right, I'm going to introduce another tool here, which is the opening range dominator. Okay, so we're going to bring this one here. It's going to be 43, 46. Pivot is going to stay at 60, 27. And there you go, right there. So I like it. 4,300, 43.27, 43.46. Those are three targets for the upside. On the downside, it's going to be a lot easier to identify because from 60, the next target below is going to be 40, which is gap fill or prior 4-day bounce high. Um, we have some value gaps over here, um, and some single prints, quite a lot. So from 60, it will be 40. From 40, it would be 20. Um, which is the single print zone here. A little tight. This was a weekly open for Monday. One of those Mondays there. Yeah, it looks a little tight. Let's see what we got here. All right, let's use the value area here. From 60, we're going to target the value area high for last week, which is 30. So from 60 to 30, 60 to 30. From 30, we're going to look for POC, which is at 93. And for 93, we're going to look for 65, which is the low of the 4-day balance. We're going to leave this right here, O2, which is a half back. So from O2 to 93, that's a big zone. All right. Well, that's what we got. I will publish the information. Thank you.